Hey, everyone that's tuned in into our kickoff edition of Vector Hour, featuring hosts with the most and special guests coming all the way from Detroit, Rock City. Please welcome Cryptoblood.
Hey, how you
Today,
doing, man?
hey man, I'm good. How are you?
Good, good.
How's the weather over there?
Cold as usual.
Cold as usual. All right. I saw that in your previous videos. You always carry the weight of the Red Wings on your head with pride. I
Oh
mean, you've been
yeah,
having the
Red
last.
Red Wings, Detroit hats, Tigers, Lions, Bears. Oh my.
Yeah, nice, very nice. Detroit, they've been sitting comfortably in the middle of the pack in the Atlantic Division, fifth out of eight, I believe. But
Mhm.
you know, I can't really judge. The Sens are one spot behind the Red Wings, so sporting another mediocre season.
I'm used to it. I'm used to
Yeah,
it.
same here. All right, so today we'll be talking about some recent game-changing events that took place in the U.S. in the last few months. We'll also touch on the impact of the war in the Ukraine and what it means to hodlers, as well as the importance of using Vector's technical analysis tools to analyze market with intelligence. Right? So, Cryptoblood, tell me, how has your experience been with the crypto market in the last few days?
Great. I've been making a lot of money. Volatility as a trader, volatility is great for us, especially
Mm-hmm.
if you have a great trading strategy. So it's been great. I caught the move up yesterday, short squeeze up. I got tapped out of Bitcoin, but had sustained my Ethereum long, so was able to get that one and also caught the way back down. So it's been great, man. I've been loving the volatility. That's what we love in crypto, right? See, I come from the FX world. Traded FX for
Ah,
17 years. So,
very cool.
yeah, the volatility is it used to be there a lot. It's calmed down over the last few years because of the Federal
Mm-hmm.
Reserve and easy money and it's just they've just pretty much controlled all markets, right? So currencies have been for the most part very calm, but that's why I love cryptos. So I'm excited, man.
That's great to hear, man. And so, tell me, what has been your experience or the differences between the forex market and the crypto market in terms of volatility, in terms
Yeah,
of performance?
extreme volatility. So in FX, you would a big day would be a 1% move.
Mm-hmm.
In a particular currency, euro, yen, or whatever pair you're trading. I used to trade euro. Used to trade the yen a little bit. That's a carry trade currency, but mostly euro, and I would trade pound. So pound and pound yen would give me the most volatility, but still 1%, 1.5% is a big day. Cryptocurrencies, 4%, 5%, 8% is a big day in cryptocurrency. So I love it, man. I like it better than um, FX, and it's the future, right? These fiat currencies are going to probably, I won't say die, but transition into a digital format,
Mm-hmm.
which will be essentially the same thing, just with
Right.
more surveillance capabilities by each of these
Mm-hmm.
governments. So crypto is definitely better.
And it seems like it's trending that way as well. A lot of global governments are coming together, thinking about strategies to decentralize the financial system using central based currencies, right? So
Yeah,
it's
which
definitely
sounds
trending.
kind of ironic, right? Decentralize it with centralized currencies. So it's nothing new, I
Go
don't
figure.
think. Yeah, I don't think it's just the same game wrapped up in a new bow and tie. They're gonna be able
Hmm.
to still control the supply and manipulate and do it better. Honestly, do it much easier. They won't have to go through mechanisms like increasing the Fed rate at the
Hmm.
window and waiting for those things to happen or kind of more organically, if you want to call it that. With the
Hmm.
CBDCs, they'll be able to just literally take supply out of the market immediately, instantaneously. So we'll see. It'll be a gift and a curse. It'll be a curse for us, but you know, we'll see.
Let me go ahead and share my screen here,
Okay.
and let's talk some business. Perfect. So I wanted to highlight this peak. You probably remember this really well, right?
69K.
69,000. Yeah, peak on the horizon. Every hodler's dream was coming true that day. The new all-time high, right? So this whopping 69,000, it was very short-lived, right? We saw the bearish market continue to decline as of that day, and it's still lateralizing. What do you think? What do you think is really happening here with cryptocurrency, with Bitcoin specifically?
Well, just normal ebb and flows. However, I would say I was calling 20K at 69K. So I was just being, everyone was like, "Blood, you're just you don't know what you're always a bear and da, 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 all this." I'm like, "No, guys, like we really never tested the previous all-time highs of
Right.
20,000. So markets have to test those levels." And I said I'd rather it happen now versus us go to $100,000 and then have to go back and test 20K.
That's
So
true.
I
That's
just think
true.
we're going to just go back to 20,000. And I have had very renowned trader Gareth Soloway. He's been on a few times on my channel. Very known trader, and he's got numbers of 14 between 14 and 18,000, somewhere around there, for a bottom, which I can understand. I didn't think we would go that low. I thought maybe 20K, like 20 to 19K, plus or
Mm-hmm.
minus. But yeah, I just think it's a huge move up, and as you get larger, you suffer from the law of large numbers with these asset classes. $69,000 for one coin is nominally it's a lot of that's a lot of digits. It's a lot of numbers. So just a cool off period. It's interesting though because a lot of people, and it should be very evident now, and I've been calling this for many years, that
Mm-hmm.
Bitcoin is not a risk off asset. It is a risk on asset. So
Mm-hmm.
in scenarios where you have geopolitical uprisings, you have issues in equity markets, that is we're seeing how Bitcoin is reacting. It used to be, well, like I got into Bitcoin in 2013. It used to be a risk off asset, but I mean, come on, like the market cap was $100 billion, or less. So, can we really say what it truly is at that point? I don't think so. It's matured now. You've got a lot of Wall Street guys in it, a lot of hedge funds. Um,
Mm-hmm.
it is now a risk on asset, so people need to really treat it as such.
That's right. I mean, the traditional markets are trying to incorporate cryptocurrencies as much as possible, using ETFs, using
Right.
mutual funds, using a variety of different products that you'd find in the traditional market to try to embed the infrastructure of cryptocurrencies into the traditional market in the future. Now, do you see this line being thin, or do you see this line expanding in the future?
Oh, expanding without a shadow of a doubt, because it's just, and it's not some conspiratorial type of situation, in my opinion. It's just simply put this way: if you have more hedge funds, um, Wall Street banks and venture capitalists, or all these different, even family offices, smaller operations, if they start getting into this new asset class, what asset class are they already in? They're in equities, they're in bonds. So quite naturally now, cryptocurrencies become part of their overall trading strategy. And so if one affects them, they have to pull from the other, right? To cover margins, rebalance, so on and so forth. That's what's happening. So you have these guys with now crypto on their books. If the stock market falls, well, guess what? They're going to take some of those gains from Bitcoin to
Mm-hmm.
rebalance. It's
Mm-hmm.
just it's going to expand. Okay, so I just hope people, because the trend in crypto is that, oh, this is a new system, we're getting away from the old system, f the banks and all that stuff. I mean, in theory, yes, that sounds good on paper. That sounds really good on paper, but unfortunately, as this market grows, it becomes more in tune to other larger asset classes, and that's not necessarily a bad thing. I think we're still in the early days of trading cryptos, where a lot of, I know this is a trading show, we have a lot of opportunity to take advantage of this volatility and make a lot of money. So
That's that's right. That's right. Totally agree with you. So basically, big investors, big banks are using a variety of different asset classes, if I'm understanding this correctly, and they're basically using cryptocurrencies as a form of a hedge on inflation, a hedge on different the performance of
that's
different
right.
asset classes.
It's a great
Very
hedge
cool.
against inflation. I mean, just
Hmm.
look at the price. For the
Hmm.
last nine, I've been in. It'd be this March, this month. I've been in Bitcoin and cryptos for 9 years. I got in at 90, 79, $89, somewhere in that range.
Jeez. Wow.
Okay, that just shows you the hedge against inflation. it is. It's been the best asset class against inflation. So yeah, no, I think it's still a great opportunity for traders and active traders to, and even hodlers, to make money.
Definitely, definitely. So I wanted to talk about this specific point here. This day was December 6th. We saw this bearish market. We saw this downtrend in the market,
Mm-hmm.
and we saw it lateralize after this specific day, rebound a bit, and decline even further up until this next point here. So, what is the significance of this point here? Well, actually, the infamous Satoshi Nakamoto must have been having the time of his life up here, but down here he started, I don't know, probably started crying. So, speaking of which, on this specific day, Craig Stephen Wright, an Australian computer scientist, won a big case in Miami. He was awarded a total of 1.1 million Bitcoin, worth approximately 43.1 billion US dollars today. That definitely puts him up as one of the richest people in the world, if I'm not mistaken. Right? Do you think he's the real deal?
No, not at all. This guy couldn't even. I followed this and covered this on my channel. This
Oh,
guy
good.
um, couldn't even prove that the wallets that were in the evidence were actually held by him. What I mean by that is that we know that in Bitcoin, you can just simply, if you have the private keys to a wallet, public wallet, you can sign a note saying, I'm the owner of this wallet. Well, ironically enough, one of or two of the, I think there were like 60 something or more Bitcoin addresses that were in deposition or whatnot for this case. Two of the bigger wallets, actually, someone went in, signed a transaction from that wallet, and said
Wow.
he is he is not Satoshi Nakamoto.
He is
So
not the guy.
he
He's
is
not the
not the
guy.
guy. Now, was he
Mm-hmm.
around during the early days? Did they have some dealings with potentially the people who started it? Yes, I think so. But
Mm-hmm.
I do not think he had any dealings with actually architecting and designing the Bitcoin protocol.
So I heard that maybe Nick Szabo, according to Elon Musk, could also be the potential Satoshi Nakamoto, right?
I don't think it's
Considering the
one
fact that
person. I don't think it's
it's a
personally one
group of
person. Yeah, it's a group of
people, right?
guys, cypherpunks, that got together and solved that Byzantine fault tolerant issue.
Hmm. Interesting, very interesting. So after this specific day, we saw a sideways market begin to happen with these candlesticks. We saw it reach a peak, decline once more into a bearish market, and then here's our next point. So what happened on this specific day? I think you probably know better than me, but on this specific day, Jerome Powell was sworn in to the Federal Reserve, right? Tell me a bit more. Tell me a bit more about what happened that specific day when he was sworn in.
I don't know. So, was his position renewed? Maybe I think it was.
Mm-hmm.
So I don't know exactly what happened on that day, I believe there was some talks about a paper coming out that the Federal Reserve, I don't know if that's what you're talking about, like a report they were going to be doing about digital currencies. And it got delayed and delayed and delayed, and they finally released it. I don't know what day they released it. Is it that
Mhm.
day?
Good man. That's exactly what happened. Yeah. On that
Okay.
day, the Committee on Banking, Housing, and Urban Affairs, they got together, right? He was sworn in, and
Mm.
the hearing was basically about very important economic topics, the impacts of COVID, inflation, unemployment,
Mm-hmm.
but a specific focus on CBDCs,
Mm-hmm.
right? Which are, as you've already mentioned, central bank digital currencies. Senator Pat Toomey, he addressed Powell with his views and concerns about CBDCs. He said, some had advocated, as you know, that a central bank digital dollar be used and developed in such a fashion that individual Americans have retail accounts with the Fed, and the Fed becomes the retail banker for America. It seems to me that there's absolutely nothing the history, the experience, the expertise, the capabilities of the Fed that lend the Fed to being a retail bank. Is that a fair observation? He said. And then Powell's reply, which I found incredible here. If Congress were to authorize the Fed to pursue a central bank digital dollar, is there anything about that ought to preclude well regulated privately issued stablecoins from coexisting with a central bank digital dollar? So, by creating a stablecoin, such as the proposed digital dollar in the United States, the Federal Reserve would basically begin to compete directly for Bitcoin's market share. That alone would cause a stir in the cryptoverse, right? Especially since this would all be regulated by the US central bank. Now, do you think the US is going to go forward with this? Do you think that it's going to severely impact the price of Bitcoin?
Of course. So okay. So I like how you highlighted that the Jerome Powell pivoted and asked about stable coins, right? Because
Mm-hmm.
stable coins adds a lot of liquidity to the crypto markets.
Right.
Um, so if you X stable coins from the crypto markets, it is going to fall drastically. Meaning X meaning some type of hard regulatory framework around stable coins. It will definitely cause some issues short term in the crypto markets. But I don't think CBDCs directly impact Bitcoin or cryptocurrencies. It's again, as I
Mm-hmm.
told you at the beginning, it's the regulatory framework that they set up that will be rolled out around putting a CBDC out. So, yes, it will have a great impact on Bitcoin, crypto markets, short term. And I said this many, many years ago when we were, it's 2017, when we were
Mm-hmm.
hitting that $20,000 Bitcoin. Everyone was like, "Yay! It's, we're taking over, power to the people. These banks can't, these governments can't stop us," and all this. Say, wait a minute, guys. Listen, there's one more Rubicon. There's one more hurdle we have to pass,
Mm-hmm.
and that is the fight against the Federal Reserve. And we're starting to get into that phase, I think. And so I think that will be the last hard leg down in the crypto markets. It'll be a battle and maybe take years to pan out. But that once we get over that and build a base there, now where does that leave Bitcoin, crypto markets, and the total market cap for the crypto markets? I have no clue. And
Mm-hmm.
I really don't care because I'm going to make money going up or down. Just make sure it doesn't go sideways. We're good. Up or down, no sideways action. I can't make money in that environment.
Speaking of sideways action, after this specific day, we saw, a few days of lateralization in the market. We saw a big dip
Mm-hmm.
right around here, right?
Mm-hmm.
So what I've done here is I've drawn out Fibonacci retracements to take a look at the potential price point. So based on this technical analysis here, we can see that Bitcoin has a potential to actually climb back up to the 62,402 mark, probably by, let's say, mid March. Now, is that possible? Anything is possible with the crypto market.
Yeah, yeah, anything's possible. But I don't
But the
personally.
war on Ukraine and the invasion in Russia, I'd, mhm. Go ahead.
I'm sorry, you were breaking up, so I started talking. I didn't realize you were still talking. You're good now, though, I think.
No worries, no worries.
Yeah,
Yeah,
yeah. So I
might be
was just
an
saying, you said,
internet
is that
connection
possible? Is that
problem.
possible? Yeah, it's possible to go up there. Like you said, anything is possible in the crypto markets. However, we have two main
Hmm.
fundamental events or things that hover over the crypto
Hmm.
markets. You mentioned it, Ukraine, Russia war, possibly heading into a World War III. And then you also have the Federal
Hmm.
Reserve interest rate hikes that are starting next
Right.
week.
Hmm.
Um, I can't see Bitcoin pushing through that. I just neither of those, you know. Um,
Hmm.
so yeah, I mean you can draw. I see you have your fibs extensions going on. You can also do retracements and figure out where we head
Hmm.
lower in the market. I think is would be even a better assessment of where we are with Bitcoin.
Very good, very good. So definitely being empowered with technical analysis tools, definitely very important when
Yes,
analyzing current events in the market.
that's why
Absolutely.
we use vector,
Uh,
baby.
that's why we use vector. That's exactly it. All right. So next up, just want to switch over to this layout here where
Mm-hmm.
I've drawn out my GAN high low. You got the financial volume here as well. I wanted to focus on a few things here. So since the war has begun in Russia,
Mm-hmm.
Bitcoin has experienced a bunch of swing highs and lows. We're seeing it begin to lateralize. We're all hoping that obviously this war comes to an end soon. We've
Yes.
seen a lot of sanctions imposed on Russia by the United States, by Canada, by Germany. But then again, Russia has a lot of power in their hands, considering the pipeline that basically goes all the way to Germany, providing oil and a lot of
And
other
this is why
commodities.
Germany and Russia met yesterday, not
Mm-hmm.
Germany and Ukraine. I talked about this in my video
Right.
yesterday. People have to connect the
Interesting.
dots. Yeah, it's so if anything is going to happen from a resolution standpoint, it's going to be coming from Germany because they have the most to lose.
Right. They have the most to lose, and they're the powerhouse in Europe,
Mm-hmm.
at
Right.
least from my perspective, right?
They are. Yes.
And they distribute all the energy to
To the
most of
rest of
Europe, right?
EU.
So,
Exactly.
right. Very good, very good. So we're what 15 days into the invasion of
Mm-hmm.
Ukraine, right? The traditional markets have tanked at the beginning, but we saw some commodities increase,
Mm-hmm.
uh, such as oil, right? And we saw U.S. release some emergency oil reserves to sort of counterbalance the effects of the invasion. Some sectors have been showing surge in stock performance, but when it comes to the cryptocurrency market, when we talk about crypto assets that have much higher liquidity than the 3-day settlement that you find in traditional markets, we really have to dive deep into the charts. But before we do so, what kind of trend do you think that we'll expect to see from the sanctions being slapped onto Russia, with the oil market basically, literally and metaphorically, up in flames? Now with Russia threatening to cut off its pipeline to Germany, it's a pretty big chess game that we're seeing now, and every player is strategically positioning themselves and planting a move. Are we looking at a long-term investment strategy for hodlers? Maybe scalping for day traders?
Hodlers, I'm concerned about because it depends on where your hodl started. If your
Mm-hmm.
hodl started at 69,000, which is, I met a guy that actually yesterday, ironically enough, met a guy, older gentleman,
Mm-hmm.
um, a buddy of mine told me that, or introduced me to him, and he introduced me as the crypto guy, the crypto expert, right? He's like, "Oh yeah,
Nice.
man, I got it in here and it ran into some cash, and this guy convinced me at 65,000 that we were going to 100,000, so I put a lot of money in it, And I'm just looking at it, I'm like, ugh, man. So it just all depends on where you hodled, where your hodling started. So that's why it's important to dollar cost average. I know that was one thing we were going to talk about in today's
Mm-hmm.
show. Dollar cost averaging in if your strategy is being a hodler, you must dollar cost average and not put all your chicken in at one price. Spread that across different price levels. But typically your hodlers tend to be people less savvy,
Mm-hmm.
in my opinion. So that's the only strategy they have is to hodl. So it's kind of hard to tell a hodler to look at price levels and pick and dollar cost average in when many times they don't understand that quite yet.
Mm-hmm.
Um, I hodl a certain percentage of my portfolio, of course, but I
Mm-hmm.
actively trade about 20% of my portfolio. So
Okay, good. The 20/80 rule.
yeah, exactly, exactly. So hodlers, I think, are in for some pain.
Mm-hmm.
I do in the short term. I mean, look,
Well,
we're at where are we trading at currently in Bitcoin? I think we're at 39,000. I mean, I think we could take another 50% haircut from here easily. That would take us to 20K.
that's that's actually very true. This was actually the first day of the war,
Mm.
and looking at the financial volume, pretty crazy, right? Pretty crazy. We have 4.332 trillion in volume traded that specific day. We
Wow.
saw the price being pushed down, probably a lot of people selling, right? Probably Russian oligarchs selling what they have, maybe moving money around. And then we saw a spike of maybe optimistic investors looking to drive the price back up
So
and
you
wanted
see
to
that
actually
you see that you see that one big candle to the right of your arrow.
right here.
That Yep, that's where the
Mm-hmm.
Russian oligarchs began. I think the sanctions went in a day or two prior to that, and that's when the oligarchs and billionaires started using Bitcoin, which is a good thing. I didn't intend or I didn't predict that this would happen because we can't think of all things, but it was great to see this happen. This happened back in 2013, late 13. I
Mm-hmm.
remember Cyprus. So the whole banking crisis, Cyprus, uh, kind of made people. They shut down their banks. They wouldn't allow people to take out any cash. I think you can only take
Mm-hmm.
out 200 or 300 euro a day. They were penalizing people with over 100,000 euro in their bank accounts. And so we did see Bitcoin. It was an early market, but I remember Bitcoin doubling from there. Bigger market now, so you won't see those types of moves, but you did see a nice pump because I really thought right there before the war started, we were actually going to make a new low. I personally thought. So we were about to make a new low. The war started. Boom. We got delayed I think, inevitable. We're still going to make that low. A new low, local low there. So,
Anilo. Anilo. And talking about dollar cost averaging, investing incrementally, we saw the effect of the global economic crisis during the pandemic. Uh, More and more people have less disposable income at the end of the day. So basically, maybe a good strategy for hodlers is to invest incrementally on a regular basis to sort of, battle the effects of inflation and volatility in the market, right?
right.
Uh, Very good. We saw here the signal change the day after the beginning of the war. We saw a temporary increase in the market. And I honed in here because this is actually an evening star, a candlestick pattern, right? So usually would signify a bearish market, but then again, with the news of the liquidity of the Russian oligarchs and moving around their assets, giving it over to the relatives, right? Boost in financial volume here, and then once again, signal changing again. And as we can see here, once more, a bull market starting to grow. Do you think this is going to last for a few days, a week, or do you think that we're going to maintain that volatility for a while as the market lateralizes?
Yeah, I think we make new lows there, where you have I can't you can't see my mouse, but that last low there to the left, we're gonna break, I believe. Right? Yep,
Mm-hmm.
right there, in the middle of the screen, kind of. I think we're gonna just take that out. This is a very bearish candle here that currently
Mm-hmm.
that we're on. What is this? The day? Is this the day candle? Day
Yep.
chart or yeah? So you
Day
see
chart.
yeah, you see yesterday we had a bullish, another short covering squeeze there on news about. Honestly, it wasn't about. I did in my video yesterday. I talked about everyone in the crypto markets had it wrong, in my opinion, about why we moved up. It wasn't because of Biden's executive order leaked, because that's not bullish
Mm-hmm.
for Bitcoin. It's not bullish for Bitcoin to see four
Right.
agencies, him put three or four agencies, regulatory agencies, on trying to figure out what to do with Bitcoin and crypto. That's not bullish. When has a government
It's
ever
not
been?
bullish.
Yeah, when has that ever been bullish for any asset class, any industry? More regulation, in my opinion, causes more issues and slower growth. So the real reason we saw the pop was literally because there were talks between Germany, as we just talked about, and
Mm-hmm.
Russia. And there were, on the hopes that there would be some resolution from this. It didn't happen. So now we traverse that whole pop and short squeeze. And if we close today with this red candle, uh, basically lower than where we opened yesterday, that would be just about a bearish engulf candle on the day chart.
Mm-hmm.
So I'm short, been short since yesterday. So I'm in the
Okay.
money on both Bitcoin and Ethereum, and we'll see what happens though.
And the future of Ethereum. Speaking about Ethereum, so moving over to proof of
Stake.
proof of stake. Very good. And do you think that this is going to have an impact on the efficiency of the blockchain network, the network's health in general?
I'm be quite honest with you. I'm not convinced they're going to be able to pull it off.
Mm-hmm.
I've been saying this for a few years. See,
Mm-hmm.
people don't realize that they've been talking about moving from proof of work to proof of stake since 2016.
Right.
So you would have had to been in the space to understand that. So I call them bluff every time I hear, "Oh yeah, around the corner, we're upgrading and we got the beacon chain running and now and this and yeah, okay. It's very hard to fix an engine when it's running, and that's essentially what
Right.
the Ethereum Foundation and dev team is trying to do. They're trying to upgrade an engine while it's actually running. I hope it works, but I'm not convinced, man. I am not
Mm-hmm.
convinced that this is gonna run smoothly. So we'll have to see.
Yeah. I mean, the impact on the miners, right? The impact on the miners as well. They're not going to be so happy about that.
No, not at all. Not at all.
All right. So basically, congrats. Cryptoblood. We survived the pandemic, right?
Yes,
But we may be on the
yes.
brink of World War III.
Oh my
Uh,
God, what kind of
However,
world are
I
we living
definitely
in?
hope not.
I hope not either.
Definitely. So, one question for you: when we talk about the notion of dollar cost averaging, does it make sense right now, or should I hit the panic button and sell in general?
Can't give financial advice, but if I were you, uh,
Mm-hmm.
and you were savvy, I'm assuming the individuals watching this show is they're going to be more savvy. I would be
Mm-hmm.
shorting. I mean, I'm in a short position right now, so I think we had lower. But if a longer term perspective, sure you can nibble here as a hodler and dollar cost average in. But hey, from an active trader, I would be shorting the
Hmm.
markets at this point.
Right, the
Mm-hmm.
market was kind of stable for years, and out of nowhere, we saw a boom in
Right.
cryptocurrencies, a boom in Bitcoin.
Mm-hmm.
Do you think that this could possibly happen? This type of lateralization in the market?
Uh, Not sure. I don't think so because there are different variables in play now. Again, one being the
Hmm.
overall arching theme is the Federal Reserve. Now, I do
Right.
think at some point they will have to capitulate and stop their interest rate hike program,
Hmm.
or QT, quantitative tightening. I think they will not get through their whole dot plot. I think they wanted to do like 8 raises by the end of going into 2023. I don't know what the time frame was, but they won't make it. The markets will be so horrible by the time they get maybe halfway through. They'll reverse course. They'll either stop or start to QE again and begin to decrease rates. So we'll see what happens, man. But as of now, I'm not too positive on short term the direction of the crypto markets.
So another thing I wanted to talk to you about, Cryptoblood, is the importance of on-chain data and the information that we can retrieve from using it. So let me just pull up
Yeah, that's what I like most about Vector is that on-chain data tool.
on-chain data. So in blue, we have the MVRV, right? The market value to realized value. And here in yellow, we have the hash rate, right? So as we can tell, so the war started around February 24th. But even early on, we can see that, you know, the hash rate is pretty high, which is a good sign in terms of the blockchain's overall health, right? Because the higher the hash rate, the better the overall health of the blockchain network. And the MVRV is a bit of the opposite, right? When the MVRV is lower, right, it could be a sign to buy, a good sign to buy or get into the market. So, what are your thoughts on this?
Yeah, higher hash rate definitely means there the on the miner side, right? Not necessarily
Mm-hmm.
the speculator spot price, but the miners are confident in where we are, right? So you're going to
Mm-hmm.
see that hash rate. The more miners are on the network, the higher the hash rate will be. So I'm not familiar with the blue one. I'll have to take a look at that one and start analyzing it and seeing where it can fit into my trading strategy.
Absolutely, absolutely, definitely useful to have it. Um, Basically, when we talk about the MVRV, we're talking about the difference between the market value and the realized value uh, of the blockchain in terms of a ratio, right? We're comparing the price of the crypto asset, what was bought at, relative to its current price. So basically, when we have a lower MVRV, it serves as a buy signal. And when we have a higher MVRV, it may serve as a sell signal into the market as well. So it's always good to keep up with the network data tool in order to make the most informed investment decisions.
Yeah, for
So
sure. What time frame is this?
this is the 1 day chart.
One day. Okay,
So
gotcha.
1 day chart is definitely appropriate to use
Okay.
on the network data tool. But I personally, I've been keeping up with all the news of the war using the crypto report and the newsfeed report as well. Let's take a look at a
Yeah.
few headlines here. So the Fed partners with China's blockchain ally, EU sanctions to extend to crypto. All right. Um, this kind of caught me off guard. What's this about? Let's take a look. So Fed sanctions partners with China's blockchain ally. EU says sanctions extend to crypto. So yeah, the Fed Now project.
Yep.
Have you heard about this?
Of course, I've covered this. I've covered this. The
You
Fed
have.
Now project is
Mm-hmm.
honestly what um, it's the upgraded ACH system that we
Mm-hmm.
use here in the United States. So I think that's what the CBDC currency will run on the new Fed Now platform that they've been working on for a few years. It will
Hmm.
allow instantaneous transactions to settle, or transactions to settle instantaneously. Pretty much like a Cash App framework, but for the Federal Reserve and interbanking system. So
Very interesting. Very interesting. And also, to to team up with China, do you think that this could be a type of strategic financial alliance with China amidst the events that are going on in Ukraine?
I have to read more into that. It looks like they may be using the company that possibly helped with China CBDC. I'm not sure. Maybe to help them with rolling out Fed now. I'm not sure. I'll have to look into that a little
Mm-hmm.
bit more. But EU says Russia, Belarus sanctions extend to crypto. Again, this is what I was talking about earlier. We
Mm-hmm.
have to be cognizant of those attacks against crypto in this manner, and that will be and have a bearish effect on the crypto space, not necessarily the CBDCs directly.
Absolutely, absolutely. So I think to wrap up here, I wanted to really thank you again for taking part of this special kickoff edition of our Vector Hour. We went through the importance of leveraging the tools and resources and using technical indicators and analysis on the Vector platform in order to empower us to make the best or most informed trading decisions. Right.
Yep.
I hope next time we could talk about different topics, including the metaverse,
Yeah,
NFTs,
I'm so
maybe
excited
even
about
crypto
that.
games.
Yeah,
Right.
I'm excited about that. That's huge, in my opinion. The metaverse is going to be huge. So, yeah, we'll love to come back on for that.
So Cryptoblood, that's so great to have us. So great to have us together and talking about all the different impacts on the war in Ukraine, on recent events in the US that have impacted the cryptocurrency market. So thanks everyone for tuning in. Don't forget to like this video, subscribe to our channel for more content. We'll leave a link in the description below for Cryptoblood's channel as well. Not to mention a free trial of the Vector platform so you can take advantage of the same tools and resources and much more exclusively on the Vector platform. So thanks again, Cryptoblood, for participating today, and looking forward to seeing you soon.
Holla!